Today's conversation is sponsored by First Generation Capital Partners.
The psychology of the Americans. Who are these people, Americans? They're people that have left from all over different countries around the world and ended up in the US. This idea of being free. They want things done a certain way. They want to live a certain lifestyle and they want to do business a certain way. If you want to do business, that's the country you want to be doing business in, United States.
Totally.
Welcome to the Going Long Podcast. We're back once again to continue to help to educate you so that you feel much more comfortable as well as confident investing beyond your backyard. I am your host, Billy Keels. And you know what? I am really, really excited that you've decided once again to come back to join us here in the Going Long family. And I've got great news to share. Once again, our podcast continues to move to the top of the rankings thanks to you. You continue to download the episodes. You continue to share them with your friends. And you continue to leave honest written reviews and ratings. And if you haven't done that, take just a couple seconds. If you don't know how to do it and you're on the Apple platform, we've made a really simple video for you to go. It's even here in the show notes. Just click it. It shows you exactly what you need to do. It'll take you probably 15, 20 seconds. Maybe, I think it's around that. But yeah, leave your honest written review as well as your rating. And that's something that we go through, we watch, we read, and we continue to adapt the podcast to make sure that you're getting exactly what you want. And speaking of which, if you've wanted to see a previous episode, you wanted to watch it, you wanted to listen to it, and you can't find it on your platform, just go to billykeels.com. Once you get to billykeels.com, just go to the podcast tab. There you will find every single guest from the very first episode to the most recent episode that's been released, which is today's episode. So you can go there, you can check it out, billykeels.com. Once you're there, go to the podcast tab, and you will be able to check out every single previous episode. For those of you who are accredited investors, you have $1 million of net worth, not including your primary residence from a net worth perspective or from an income perspective. You've generated $200,000 of income over the previous 2 years, and you're expected to do that this year, or as a household or head of household or jointly $300,000, and you're expected to do that this year as well. You can also take a test. You can Google that, find out more about that. And but any of those three criteria, if you're an accredited investor, you want to find out more about what we're doing, you want to be a part of our investor club that's just getting started, go ahead and send an email to aiclub@billykeels.com. Once again, that's aiclub@billykeels.com. And you know, if you are someone who is living in one country and you want to invest in another, and you need to be inspired, you need to figure out how to get started. You do not come from a family that was real estate moguls and you're trying to figure out how are people doing this. Maybe you have a day job and you want to invest in a different country. Well, guess what? You're already in the right place with the Going Long podcast. But today's conversation, we're going to even talk about things like what happens with currency fluctuations. If you live in a country like Canada, where today's guests are from, and you want to invest in the US, well, you've got Canadian dollars and US dollars. Or if you're in Europe and you're earning euros and you want to invest in the United States in dollars. We're going to talk about some of this. We're going to talk about how you can also build your team, talk about some different ways of understanding and recognizing strategic relationships, and ultimately being able to have strong, sound processes and systems in place that are going to allow you to connect better with people faster and just get to building the relationship that you want through systems and process. All of these things we're going to talk about and much more. We're going to talk about that with today's guests who are Canadian, who are investing in the United States, August, Biniaz, and Ava Benesocky. It's going to be like this conversation was just really, really awesome. You're going to enjoy it. And you're going to get to the conversation just after this. If you want to know how investing across country borders can accelerate your long distance investing success, then guess what? Today's the conversation that you're going to want to listen to until the very last word. I promise. You know why? Because today's guest, well, one of them has been a serial business owner as well as developer. The other, well, you know what? Has come from a very hardworking family of accountants. You're probably going to find out how the two of them came together in 2019 to form CPI Capital. It gives me great pleasure to welcome to today's conversation, August Biniaz as well as Ava Benesocky. Welcome to the show.
Thanks for having us.
Thanks for having us, Billy. We're so excited to be here.
Absolute pleasure, yes.
Yeah, I'm really, really looking forward to this. You all are doing so many things that are awesome and really it just like goes to my heart. And I just think this is amazing because I think the entire Going Long family is going to find out a lot more why that is in just a few minutes. So as you know, every one of our guests gets the same 5 questions. You're going to get 2 in the beginning. You're going to get 3 in the end. And guess what? In the middle, I have absolutely no idea what questions you're going to get, but I know that the answers that you're going to give are going to provide so much value to the entire Going Long family. So if it's okay with the 2 of you, I'd like for us to go ahead and get started.
Let's do it.
All right, awesome. So I'm going to adapt this first question just a little bit. But if you could help me and the entire Going Long family understand, where exactly do you live in North America?
We live in Vancouver, Canada.
Vancouver is a wonderful, wonderful place. Very, very nice over on the left coast, yes. which is phenomenal. So appreciate that. And then each one of the 2 of you could share with me, what's the most positive thing that's happened to you in the last 24 hours?
Please go ahead.
Oh my gosh. So yes, 24 hours has been a great board. Can I share 3 things?
Sure. You can over deliver. Let's go.
Yesterday was a great day. Okay. So one thing that happened was we found a really great person in our back end to help us with some technical items that we've been trying to find for months and months. So it felt like winning the lottery.
Our CRM HubSpot, and it's very technical. And we found a guru that was like, just blew our minds.
It happened in a second. And then we found somebody really amazing to possibly partner with. So that was something that's really positive. And then one last thing, I've been trying to reach somebody who's super powerful and I really wanted to get on a call with. And they reached out to me yesterday and they're like, hey, I missed your message. Would love to connect. So that was really positive.
Amazing.
Fantastic.
And I'll steal one of those. Sorry, Billy, were you going to say something?
No, go ahead.
It's that conversation that we had with a potential partner. So CPI is at a unique stage where we are thinking about bringing on a partner, an equity partner, in the company. So we had that great conversation and got into the deep conversation about if potentially for them to come on board and is that what they see long term. So that was my kind of great thing that happened in the last 24 hours.
Fantastic. There's so many great things happening. I think that's always fantastic. And whether it's building relationships or getting process and systems and tools done, or even just sometimes waking up in the morning is a fantastic thing. So and deepening relationships is always awesome. So really appreciate the 2 of you sharing that. And you know what? The entire Going Long family knows that I give myself this really impossible task of trying to tell your backstory in a couple of seconds. Like it's impossible, like with the depth of knowledge and experience that the 2 of you have. So if you could do us a favor as it relates to CPI Capital, if you could talk to us about a bit about the backstory. I mean, I'd love to know each one of your individual backstories as well, just so we can get a chance to get to know you a bit more. But also if you could do us a favor and highlight maybe some of the major decisions that you've made to get to this point in your journey. And then from there, we'll see where the conversation goes.
Of course.
Fantastic. So Ava Benesocky. I'm CEO and co-founder of CPI Capital. CPI Capital is a real estate private equity firm that helps investors invest in U.S. institutional quality multifamily real estate. I'm really passionate. I've been a real estate professional for the last 10 years, and I've helped many investors invest in real estate. Particularly 2 years ago, I fell in love with multifamily and the benefits that exist behind it. So I'm really passionate about now helping real estate investors invest passively and passionately.
Passionately and passively.
And educating them on the benefits that exist by investing with CPA Capital to acquire U.S. multifamily assets.
Awesome. Yeah, for me, I've been in real estate for the past 15, 16 years now. Started as a real estate agent. Wasn't really good at being a real estate agent, but I was good at finding deals. Started doing small fix and flips. Started my own general contracting company. Was building single family, more on the luxury side. Eventually scaled, always wanted to scale my business to do ground up development, townhomes, as we call it here in Vancouver, but realized many pain points that existed, the long timelines that it takes to do ground up development projects, and difficulties dealing with the city and what have you here. And just around 2 years ago, I got familiar with this process of syndication, particularly multi-family value add business model. Fell in love with it. Connected with Ava. We started CPI Capital. We started our journey in the process of, being international investors, investing in the US, because the possibilities that were available in the US were not available here in Canada. The rental yields are so low that it doesn't allow for, certain business models to work. And that was it. We've been on this journey ever since.
Yeah. And to answer your second question, the key decisions that we had to make was when August and I met and we came together, CPI Capital really spawned from a problem that we've seen for the Canadian real estate investors. So we found a solution to that problem.
For sure. And for me, just to add to that as well, is usually, larger real estate investing firms, they start out as a company that started, years ago, building its way up from, small projects, single family, and eventually scaling. When we got into the business, we came right into the business as wanting to start a real estate private equity firm. Our plan wasn't to, hey, let's start with a 10 unit and then grow it from there. What is the best investment available for our investors, which is these larger institutional multifamily, and how do we raise the equity needed for such projects? So just wanted to add that before we get right into it.
All right, perfect. Well, I appreciate those backgrounds. Just out of curiosity, so I know August primarily done a lot of, as I mentioned before, serial entrepreneur, and from that aspect, Ava, you said from a family of accountants. Do either one of you come from a family that had extensive knowledge in the real estate arena?
No.
Okay.
No.
My mom was a believer of real estate. She's her dad was in real estate, but more that a true believer of real estate, but nothing super sophisticated or anything.
Okay. And my parents that are accountants, they taught me growing up to be really good with my money and to save it, but they never taught me about investing. So that was something that I came across on my own terms. And now I'm actually educating them about how smart investments can change their life around. So
that sounds a little bit familiar to me. I'll tell you why later.
Awesome.
But so this is really interesting. So the two of you have mentioned something already, and it's vocabulary, and there's a number of different ways that I'd like to talk about that. But given that neither of the two of you came from strong real estate investing families, you mentioned that you came across this concept of syndication. I would love to know, like, kind of when you heard about it, because you're coming from it initially from a Canadian perspective, right? And I know that I've been in Europe for the last 20 years, so I don't come from a family that knew anything about real estate, and I've been learning this along the way. And I'm surrounded by, and we'll talk about this because I'm wondering if the dynamics are similar in Europe where I live. But what were your first initial reactions when you found out about multifamily syndication?
For sure. So I've been helping real estate investors invest in real estate for the last 10 years, particularly here in the great cities of Canada, which is Vancouver and Toronto. You're pretty much banking on appreciation. And I know that real estate investors, when they come to me, Ava, I want cash flow and I want appreciation. Now, with the median home prices in the two great cities being $1 million to $1.3 million, you're most likely going to be in that negative cash flow. So you're not going to hit the second component that exists that you want to see as a real estate investor. So when 2 years ago, when I was walking by August's office and he heard about this syndication model that not only is incredible business model, but the returns that investors get, cash flow and appreciation, that's where light bulbs went off. And we're like, wait a second, I've constantly been kind of trying to help people, and they've really kind of been turning around in circles. There's a little bit of chaos that exists for real estate investing. That's when everything kind of got exciting for us, and we fell in love, and we're like, wait a second, even though it's across the border, let's figure out how we can bring these to the Canadian investor. That's dealing with a lot of pain points that exist here in Canada.
Yes. And for me, I mean, it started, when I learned about the possibility that exists for this kind of pooled capital by investors and a general partner that manages everything. I fell in love with it right away. So I started doing more research about larger private equity firms like Blackstone and KKRs and Apollo. Started reading books like Barbarians at the Gate and King of Capital. that talks about, building of these large private equity firms. And I wanted to duplicate the same thing within real estate because I was a developer looking for more equity. Obviously, with Canadian rigid mortgage laws, it was difficult to, get high leveraged loans. I wanted more equity, but there was not really a process. So I wanted to combine the two worlds together when I realized that, hey, this is already taking place and it's called syndication. And the blueprint is already there. A lot of the content seemed to be coming from the US. There wasn't a lot of content here in Canada on the legal side of it as well. I mean, in the US, there's different types of corporate entities that exist that we don't even have here in Canada. In the US, LLC is a very common entity to create, to own real estate through. We don't want to have LLCs in Canada. So it was education for me, but I fell in love with that. And another point that I fell in love with is, as a builder or a contractor or a real estate agent, I got paid no matter what happened with the deal. I was the middleman, I got paid. But in real estate private equity or in the syndication model, the GP is compensated relative to the performance of the asset or their performance. And I fell in love with that as well because I'm like, okay, this person finds the deal, brings on the investors, puts everything together, manages everything, but gets compensated depending on how well the deal does. And I fell in love with that aspect of it as well. That was my journey.
And one more thing I wanted to touch on, this concept of passively investing in real estate, where you can literally still invest in a tangible asset and you're free from all the headache as trying to be this active real estate investor, which is what I was trying to help people do before. They have their careers, they have their family, they have a life, but they're taught invest your money into real estate. So they're literally breaking their back saying, okay, should I do a fix and flip? Do I do the BRRRR? Do I do this? Do I do that? Yeah. And now I'm like, hey, guess what? You can show up, write a check and literally build wealth while you sleep. So it's such a rewarding feeling waking up every day, being able to have that conversation with people, because a lot of people here in Canada and the US, they're so unaware that they can be part of something like this.
Yeah, definitely unaware. And it even extends beyond that into Europe. I'll tell you. So one of the things that I typically like to ask people, and you've already kind of alluded to it, right? But my thesis is very much the same as the way that your business has been built, right? And all the books that I read that said, hey, listen, invest in your backyard. You're going to make a couple $100 a month. You'll be the landlord. You do this, you do that. Well, in the same way that you live in Canada and are, investing in the US in terms of multifamily assets, I live in Europe and I exclusively invest in a number of different asset classes in the United States. And I think that there's a major strength in being able to have the mental and emotional fortitude to invest beyond your backyard, which is one of the reasons that I started this podcast. I'm curious as to, you've talked maybe a little bit about it twice, but why did you decide to go against all popular knowledge and education, which says invest where you buy or buy where you live, and decide to go not just long distance, but cross-border, cross-currency? Why would you ever even think about doing that? Why?
Because
go ahead.
I love this.
Yes.
It doesn't work in our own backyard. The numbers just don't work in our own backyard. So we're like, wait a second, let's go through it all, because we could help the masses by going through it.
Yes.
And starting our company.
Yes.
To help people. The numbers just don't make sense in our own backyard.
Yeah.
So go ahead.
So it came from a need, basically. Yeah. For me, I mean, it wasn't only for following the common, what is expected and common knowledge. Is also my view of the situation was, yes, invest in your backyard. I was building mostly in a suburb of Vancouver called Richmond. I didn't even want to go out of Richmond, which is a city of 200,000 population and what have you. So I was a victim of that mentality as well. But I mean, when we started and we saw the potential that exists in the US, we saw, the richest country in the world, over 300 million in population, extremely business friendly. There's an interstate migration that's happening within that country. And the numbers are so different because we're so focused on our own, the way real estate is conducted in Vancouver and in Toronto. We think that's the way it is. That's just going to be that's the status quo. But when you look at the US, in Vancouver, multifamily apartments are being sold, apartment buildings are being sold at 2% cap rates. That means if you buy the whole apartment building cash, you'll get 2% on your money, which is below inflation.
Yeah.
So what, in the US, in most places, they won't even touch an apartment building if it's less than 4% cap rate, right? So,
and another thing too is most Canadians are very conservative people, and they all want to invest in their own backyard. But I'll tell you one thing: if Canadians are used to a 5 to 6% annualized return that they're happy with, and we show up to the table saying, "Hey, you can invest in real estate passively. You get 7 to 9% preferred returns, cash flow, distributed monthly, and then on the back end, you're going to make 15, 20% annualized returns." People's eyes go like, wow. So trust me when I say that it was worth every last effort to learn about the cross-border, the tax implications and everything else.
Yeah, no, for sure. The educational component is very important though. So it's not just showing up and showing the deal. We had issues when we were showing the numbers to our Canadian investors, and those numbers that Ava mentioned, the 5-6% is in the equities and the funds and REITs type of returns. We're not talking about real estate.
Yeah.
So the education component is very important, even to a point that some of our advisors said, "Hey, the returns that you're advising to your bring it down because it's going to look too good to be true." Even I'm like, no, but that's what's on our pro forma. This is what our team has come up with. That doesn't matter. Just bring it lower, because when you're talking about 20% annual return, it's going to maybe get some investors to not even
Well, yeah. I mean, so it's really interesting you should say that, right? Because I was going to ask the question anyway, and through the education, sometimes, at least I've found this in Europe, is when you are explaining the dynamics of the US market and you explain that there are many more people, one of the things we talk about is the average American will move 11 times in their career. Whereas like in Spain, where I live, like you kind of are born in the city that you're going to live in, and you kind of stay there. You may go away to college, but you're typically going to move back. And this is a gross generalization, right? Everybody. So don't start sending mails and all that kind of stuff. It's a gross generalization. But in Spain, you're not going to find someone that's going to typically move 8 times. It's not going to happen. And usually, like I'm from Ohio. I went to college in Southwest Ohio. Then I moved to St. Louis, and then I left there to go to another state and another city and another state and another city. And so that generates demand for a particular type of an asset. And so unless you give that full education, and I think both August and Ava, this is what you're talking about, you have to paint the entire picture, because when you show someone just a number, they may say, look, I don't know what kind of Ponzi scheme thing you're doing here, but I don't want to be a part of that, because they don't understand the context. They're looking at the numbers, basing it on where they live. So it's a 1%, 2%, 3% return. Anything above that is just way too risky. So it sounds like you've had very similar experiences in Canada as I've had in Spain. Is that accurate?
Yes.
Absolutely.
Yes.
100%.
Yeah,
100%.
sure.
One more thing to add about, the US is also the psychology of the Americans. Who are these people, Americans? They're people that have left from all over different countries around the world and ended up in the US. This idea of being free and being independent is also, the American psychology is like, that to have certain rights and their constitution. They want things done a certain way. They want to live a certain lifestyle, and they want to do business a certain way. Hey, you want to sell your building at a 2% cap? I'm not going to buy it. I'm not going to buy it. This is not going to make economic sense to me. I'm not going to buy it. Whereas, other places in the world, people just, make investments for other type of ideas, for capital preservations, and you can see it. It's the capitalists of the world, right? It's if you want to do business, that's the country you want to be doing business in, United States.
Totally.
Yeah, it's one of those. It is in the same way that we say, even within the United States, there are certain states that are more friendly to business ownership. And it's the same thing at a country level, right? You go to one country A or country B, and if you're willing to deal with currency fluctuations and things like that, then hey, it probably makes more sense for you to go to this particular space. Just out of curiosity, because I can't ask a lot of people this, but I love that you all are doing very similar things. So a lot of times what I found, because I typically deal with people that are earning in euros, right? And so just in the same way that you have lots of Canadians that are probably earning in Canadian dollars, and we're both investing in another currency, right? Which is the US dollar. because I don't get a chance to ask this a lot of times, like I said, but so how do you typically, like, you'll get people that say, yeah, but we're investing in Canadian dollars. We earn in Canadian dollars, but we're investing in US dollars, and it's going to be over a certain amount of time frame. Like, how have you been able to handle those types of concerns, or how frequently does that happen? I guess people that say, yeah, this is the return, but if over the 3 years or 5 years or X number of years, if the dollar versus the Canadian dollar changes this and that, it has this type of impact. Because I get that question all the time with the euro. So I don't know if that's something that you have or not.
Yeah, when I speak to investors, it's not that big of a concern to them. I tell them, you know what, all investments are made in USD and all returns are made in USD. So call your Canadian bank account, open up a USD account, and Bob's your uncle.
Yeah, and just to add that to that a bit more, so there was a political side to it, and there's also the historical side to it, where Canadian and US dollars have been at a certain trading range over the years. So it is somewhat predictable, and it's because 80% of Canadian trade is done with the US. So that is done by the governments to try to keep those numbers somewhat relative. But also the US dollar. Let's talk about the US dollar. I mean, the US dollar is backed by 130 US military bases around the world, is backed by 7,000 intercontinental ballistic nuclear weapons. You got you got very strong backup, and you got a country where everybody in the world wants to do business with and most probably live. You got Hollywood. You got a lot of things that back, and a lot of technology, a lot of different things that that come from the U.S. It's the hub. It's today's the Roman Empire is today's Achaemenid Empire is the great empire of our time is today, and to live in that country is basically living in the modern world. So, and you're using that currency. I mean, the oil, where it's is run by US dollar. So, I mean, there's a lot of different things as far as, so you're not investing in a currency where it has, chances, for, currency,
currency X that's going to change. Yeah.
Currency drop. Yeah. It's a very strongly backed currency, the strongest currency in the world. So, and
everybody needs US dollar. Canadians love to travel to the US. So
yeah, you know what, and I'll just share with you all, because it's one of the things that happens. So, and this is part of what you're talking about as well, right? It's part of the education, and when you can begin to contextualize what's happening with currency fluctuations, and there's a lot of things that happen with central banks and the way that they play with the interest rates, et cetera, but it's very similar. I mean, because after having tried to do it in the very first couple of years, and I looked for these different solutions, and people could have a peg to the dollar or whatever their currency was for a certain amount of time. At the end of the day, it comes down to, hey, listen, this particular asset is in the United States, it's in US dollars, and the investment's in US dollars. So, if you're able to find something that will help you get to whatever the goal that you have for this capital in a better way, then, you may want to do that. But if not, this is going to be in dollars. It's going to be this period of time. And so history has shown that the currency fluctuates this amount. That's another risk element. It'll be in the PPM, and you just need to, be aware of that. So I think, but it's interesting because like I said, I don't get a chance to talk about it that much, but it really does come down to number one, education. August, as you're talking about, helping to contextualize things as it relates to currency. And then Ava, to your point, at the end of the day, the assets in the US, it's in US dollars. And this is the way it goes. If this works for you, fantastic. If not, well, you know what? You probably want to look for 0.5% sitting in some bank account or some high risk investment that is in your backyard. I don't know.
At the end of the day, it's US dollars. It's not chopped liver. Okay, it's the best currency in the world.
Absolutely.
Exactly. So let's maybe pivot a bit, because this is also something that's really important to long distance investors, and that is, maybe you could share with us one of the things that you go about building. August, you talked about building the strategic relationships and things like that, but also like the specific partners that are helping to actually do the day to day. Because I live in Spain. I'm not going to be there every day managing the asset. I will fly every once in a while, but maybe that how you build teams and build those strategic relationships.
Absolutely. I mean, again, goes back to the psychology and the business friendliness of Americans. I mean, Canadians, very conservative, very closed-minded when it comes to business, come to themselves.
Yeah.
Americans, I mean, in the conversations we've had, very open-minded, very eager to do business, very eager to get involved in agreements that are creative.
Very eager to share their knowledge so that you can learn from them.
Yeah, no, absolutely. So in my conversations, I mean, as far as how I was looking to structure our partnership with our boots on the ground, if you like to say, our asset managers across the regions we wanted to be in. Initially, when coming into it, I was thinking that this is going to be the most the biggest hurdle to get over. But as I started communicating with experienced asset managers, it began to see that not only is it very easy, they're very open-minded to do business. The type of rates they were charging was, because you think about Americans, hey, these are the richest country in the world. They're probably going to charge an arm and a leg, but the rates were great. I mean, they were open-minded to even do, a portion of the performance fees and the management fees of the GP that goes to them, rather than getting paid a salary or certain fees. So it's been great. It's been truly great. I mean, it's just a matter of finding the right team and starting those conversations. And LinkedIn has been a great source for me to make many of those connections. Also, in the last 2 years, as we've seen through the pandemic, this idea of being able to remotely meet people from all around the world. We have 16 virtual assistants that assist us in all different types of needs that we have with digital items and HubSpot, like we mentioned, and websites. So it's the same idea: is contract work. And also, at the beginning when we started, we noticed that there's large institutions in Canada that are investing in the U.S. and they're partnering with U.S. Companies. So we have the Canadian Pension Fund that partnered with Greystar in the U.S. and to buy multifamily assets and also do ground up development. So this idea of kind of partnering with U.S. entities in place, but as you talk to more Americans, as you talk to more American entrepreneurs and businessmen, you can see that they're very open-minded to do business, and they do great work. Lawyers and legal fees. That's another thing.
Oh my God.
Yeah, the costs
costs are astronomical in Canada, and like 1/3 the price.
And you would have never guessed that.
That was another thing that
America is. Yeah, America is a litigious country. It's got 40% of all the world's attorneys are in the U.S.
Can you tell that August might be thinking about moving to the U.S. one day?
Absolutely.
We have it in our vision for our future that will soon kind of make that move. We'll be both Canadian and American.
Exactly. So I feel American at heart. I've always felt American at heart. Yeah. I mean, maybe it's Hollywood. It's just, all your top athletes like Muhammad Ali. I mean, all the top basketball players, top boxers, Mayweather, is America. Is that, and it's, all the top business people, all the top.
And there's a lot of U.S. investors that are reaching out to us too, even though we're in Vancouver, Canada, because you know what? Go ahead. Sorry, Billy.
No, I was just going to say, no, not at all. Ava, one of the things I was just going to say is at the end of the day, and this is very similar, like now, even though I live in Europe, I have a number of investors that are based in the United States. Well, why? Because it goes back to August, what you were saying earlier, which is about team. It's about building the right team. And when you have the right team, whether that team is physically in a location or is remote, but you are part of the same team, platform, network, alliance, then it doesn't, and this goes back to what we talk about here in the Going Long podcast, it kind of doesn't matter where you live, as long as your team is the team that's going to help to provide a result for your investor. Because ultimately that's what your investor wants. Your investor is looking for a specific result. You found a specific problem to solve, which I'm curious, this is one last thing. And you're helping Canadians to solve that problem. By the way, did many Canadians once again, it's a gross generalization of the question, but you recognize the problem. But my question to you is, have they recognized the problem prior to speaking to you? Or did they just say, well, this is just kind of what everybody else is doing, so this is not a problem. This is just what we do.
Excellent question, man. Excellent question. And the issue is that we call it's in the culture. Not looking for cash flow is in the culture of Canadian investing. So when you bring it on and say, the norm is when you make a real, and I'm going to say it right here on video, when you make a real estate investment, you need to have two main fundamental concepts. You need to have cash flow and potential for appreciation. Now, if you can go in and also force appreciate the asset because of the value add or some other creative way that you can find, you got a probably the best wealth building machine there is.
You still in my lines?
You know what? I'll add one more. I'll add one more thing. So there is another piece, right? Because what we found, or I would be curious what you think about this more than this. There's another thing, but so you have these two elements. You have cash flow, which if you're outside of the United States, most people just think, you don't get cash flow. You maybe get appreciation later on. But then there's this other concept, which is tax benefits, which is something that, for instance, where I live in Spain, there don't tend to be very many tax benefits through real estate investing. Whereas now, in working with a number of high net worth individuals, credit individuals, I recognize that they tend to now think, okay, it's not just about what is the return, but how much of this return do I actually physically get to keep? So I'm just curious how you've started as you interact with people. And I know it's probably a little bit different because it's different for investors that are outside of the United States because it's very US centric, but just how the tax benefit comes into play or into the conversation more and more.
For sure. Even though we're investing across borders, because this is a huge problem at first. So we're investing across borders. There's going to be triggered double taxation. It's not even going to make sense for us to invest. But there's actually a treaty that exists between Canada and the US. And when we set up our corporate structure, and it's aligned the right way, when the flow of funds come back to Canada, our Canadian investors are relieved pretty much dollar for dollar on double taxation. So it makes sense.
Yeah, no, for sure. And I mean, again, the U.S., the tax benefits that exist in the U.S. with the 1031 exchange, with cost segregation and bonus depreciation, all these benefits that exist is really unheard of. Again, it goes back to the psychology of the culture of investing in the U.S. and the American individual is what they want is like they try to get it right and they do it in the ballot box and how they vote. But for Canadians, I mean, we're one of the highest taxed countries in the world. Yes, we do have, universal healthcare and what have you, but we pay the taxes for it. I mean, our highest tax bracket is much lower than the U.S. Highest tax bracket. So, yeah.
And also too. So, I also want to say one thing to the Going Long family earlier, and we're talking about something that has to do with tax. Ava was giving an example. By no means are we giving anybody any type of tax advice or anything like that. So one of the things that both August and Ava have mentioned to us before is it's about the team. And we're not just talking about the team, the asset manager, the developer and stuff like that. We're also talking about your tax professional. So one of the things that's really important as we give these examples of things that we've seen and understand, it's up to you to do the due diligence to actually say, okay, well, this is an idea that we're talking about or that I heard, but let me go talk to my tax professional. So please make sure that you talk to your tax professional and make sure that anything that you've heard here, how it applies to your specific situation. So, but yeah, I mean, just with that said, maybe before we get into the Going Long final three, because I know we've got to get there quickly. And I know you all do a lot of networking and things like that, especially in Canada, and helping to educate people so that they understand more about the context and things like that. Because when they go cross-border, cross-currency, et cetera, they have a better understanding of it. What have you found? I know you founded your company in 2019, but just being able to meet with people face-to-face versus being able to meet with them and leverage technology to develop relationships online. What difference have you found? Have you found a benefit or more of a challenge, just out of curiosity?
Yeah, technology has been more of a productivity thing for us because I've been able to meet people all over the world and build our company through COVID, really. And it's been really incredible. Now, I will say though, with things opening up, there is something to be said about the face-to-face, the handshake to handshake, the energy that you feel from the other person when you see them in person.
Trust is very important. Yeah. When somebody's about to give their hard-earned cash to you and you're about to be their stewards and go make the investment with them, they want to kind of meet the person. But what was shocking to us on the first deal that we closed early in 2021, 80% of our investors we had never met. I think 40% of our investors we had never even seen on a video call. Oh. So it was totally surprising to us because I've been a handshake type of businessman for a long time, and to realize that the finance world is a bit different. The investment world is a bit different. Of course, meeting a person is important, but if you're able to do it via Zoom and calls, you just got to get it going. Don't halt yourself and stop yourself just because you can't meet somebody in person. Do your pitch, get on calls, make those meetings if it could be done through video calls.
Definitely. And then being able to speak on podcasts, is a big portion of really building the know, like, and trust. So investors invested with us. They maybe didn't talk to us a lot, but they got to probably know who we were before they ended up giving, their hard-earned money to us. So we've put a lot of effort into speaking on platforms across Canada and the US, so people can really know who we are before they even get to invest with us. And that's something that's really important for us too. You got to keep putting content out there, be an educator, be a thought leader. So people can really trust you and say, okay, I want to invest with those people. Even though I've never met them before, I want to invest with them.
But also when you see people that are dedicating their lives, like yourself, Billy, having a show and creating all this content and bringing all these expert guests on and interviewing them, that's gaining you knowledge, right? That's showing you as a thought leader in the space that say, hey, this guy's dedicated his life to this business. I trust in him to make this investment, or if he has an offering or if he has a suggestion, I trust in him because he's dedicated so much of his time to it. It's like having that buddy of yours who knows every stat with basketball. He knows every player. He knows everything. If you got a basketball question, you ask it from him, right?
Absolutely.
No, it's really, really awesome. No, and it makes a lot of sense. And once again, you're not choosing either or, you're using the power of and, right? And I'm the same way, August. Like I want to meet people face to face. Like I want to be able to see people at the same time. When you can leverage, like Ava, what you were saying, you meet so many more people, and maybe this is a first step, which is after a call, you're able to hang out and do a Zoom. But before somebody is going to do a $300,000, $400,000 wire transfer, they're probably going to want to see you normally. But we're also living in new times. And so, you do a couple Zoom calls and they go, hey, you know what? Yeah, that's fine. We'll do a transfer. And
our largest investor never met us on Zoom.
Yeah.
It was a couple of phone conversations. That's the largest investor. And that includes amongst investors who are friends and family and business associate of mine. This investor was the largest investor, never met us. And we cherish that trust, and we want to work harder to ensure that those funds, number one, the capital preservation, number two, capital growth for our investors, because we want to do this long term. And the brand that we've built is so important for us, because if we don't make astute investments, that sticks with us for long term. We want to be in this business for the next 30, 40 years. So our job is to find the best opportunities and have the best communications with our investors.
All right. Awesome. So appreciate that. And listen, I want to keep talking to you forever, but we kind of have to get into the going long final three. But the thing is, I never ask anybody the going long final three unless you tell me that you're ready for me to ask you the questions. Are you ready?
Ready.
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 You're both like, yeah, we're ready. Let's do it. All right. So the very first question, we started kind of on your side of the Atlantic. And so what I would like to do is actually bring it back over to Europe now, because Europe is where I reside normally. And so I would love for you to share with the Going Long family, what is your favorite European city that you've either visited or still on your bucket list to visit?
Why don't we say at the same time where we want to go?
3, 2, 1. Saint-Tropez. Let's pop those balls of champagne.
Boom. There we go. Saint-Tropez, which is fantastic. So I've got another vote for Saint-Tropez. Fantastic, wonderful, amazing place, which is awesome. So we're going to go on to question number 2 of the Going Long Final 3. And this really has to do with a lot of the patterns that I have seen with really, really successful people. And I consider the two of you very successful people in many different aspects of your life. And so one of the things that I've recognized, and whether you call it a learning experience or a mistake or whatever, the thing that what's really successful people is that they get to be very successful because they don't make any mistakes, and they get to a place where they actually, I think I said they don't make any mistakes. I did that on purpose, by the way. That was kind of it's an inside joke with me and the Going Long family. No, but it's kind of as a joke. But the reality, right? The reality is very successful people, and I do consider you both to be very successful, is that successful people typically make a whole lot more mistakes than most people, like a lot more mistakes than most people, because they're always pushing the edges. The reality is, whether you call them mistakes or you call them learning opportunities, really successful people do one thing very, very differently. And they do this differently. No, this is no joke. What I've noticed is that they stop, they learn from the mistake, and then they do everything in their power to do something again, but always with the goal of minimizing the mistake, because they took the time to learn from the first time. So they learned, they had a mistake, they took it, they learned from it, and then they went out and tried something again, but they took that lesson. So they're probably not going to make the exact same mistake again. So I would love to know from the two of you, what is the one lesson that you know is going to make amazing impact for the Going Long family today? What would that one lesson be?
All right. So the one lesson that I'd like to share is August and I, we built our company from the ground up, and we tried to do everything and create everything from the ground up. So my advice would be a damn good copycatter. You know, don't try to reinvent the wheel with everything, because it'll really slow you down. So look for people who are successful in the business and really try to follow their lead. You don't have to reinvent the wheel. Put your own spin on it and go from there.
Great. No. Yeah. My advice would be ask. Very simple. Unfortunately, a lot of times we're afraid or have anxiety in asking questions. Mm-hmm. And if we do ask a question and we get an answer and we don't understand it, we just nod our head. Is no. If you have a concern, if you have an issue, if you're trying to understand a certain concept and you're having a conversation, or there's a deal you're looking at, and you're looking to possibly do a business with someone, ask. There's nothing wrong with asking, and ask until you fully understand the concept. You know, I've realized that with myself is sometimes pride gets in the way. You ask a question, you get an answer given to you, and you just nod your head and you walk away when you didn't understand what the answer was. You know, and asking about everything. Asking will give you knowledge, and human beings, we want to share knowledge. It's just a matter of asking the question. A lot of time, the answer is out there. The issue is that you just haven't asked for it. So ask.
Absolutely love that, which is absolutely fantastic. And, you know, I cannot believe that the conversation that we've come to the end of the conversation. It's just like these conversations go by so fast. It's and they're great. And being able to chat with two of you about some things that I can't really chat about with a lot of other guests was phenomenal. Yeah. But, you know, and as I think about just us having the beginning of the conversation and thinking about your different backgrounds and, you know, from serial entrepreneur to family of accountants, being able to come together, recognizing that there was a specific problem that many Canadian citizens didn't even realize that they had. You have now formed CPI Capital to really help shine the light on that problem that most people don't even recognize. And you're not just doing it talking about invest in U.S. assets. You're doing it from a place of education, from a place of wanting to help create the context to understand, develop strategic relationships, and to ultimately help people to be much more informed so that they can invest, make the best investment decision for themselves. And if US-based assets can be a part of that, then you know what? They're fantastic, the two of you, to be able to help Canadians and non-Canadians at this point to be able to find the right type of asset and the right type of opportunity to help them, right? And so I know, or at least I kind of think that it's going to be easier for me to stay in touch with you because we're already connected now. But I know that so many people from the Going Long family are like, oh my gosh, I got to talk to August. I got to ask Ava a question. I know they've got their systems in place. They've got 16 virtual assistants. So it's going to be super easy. So help us understand, what is the best way for the Going Long family to be able to reach out to the two of you, to be able to find out more about what you're doing at CPI Capital?
Yeah, absolutely. You can reach me on my email anytime, ava@cpicapital.ca, or LinkedIn, Ava Benesocky. We're really active on LinkedIn. So please send me a message on there, and I'll get back to you right away.
Yeah, and absolutely. I'm very active on LinkedIn as well. Our website is cpicapital.ca. We're looking to purchase the .com as well. It's in the process.
Yes.
August Biniaz on LinkedIn as well. And we have different social media platforms as CPI Capital on different social media platforms. And our YouTube channel, Canadian Passive Investing, is our YouTube channel if you'd like to watch some videos. And we'd love to have you on our show at some point, Billy.
Please.
Would be honored to join you all on the podcast. So yes, that would be fantastic. Go to cpicapital.ca watchfor.com coming up soon. Listen, we're going to include both of your emails. We'll include the link to your YouTube channel as well in the show notes to make it really easy for the Going Long family to reach out to the two of you. I do have an ask of the Going Long family. When you reach out to August and Ava, make sure that you let them know in the little description that you saw the two of them here or you listened to the two of them here on the Going Long podcast. It's going to make it so much easier for you to continue the conversation because you're going to provide them with the context. And then that way they also know that the Going Long family is an awesome family that actually reaches out and connects with other people. So, because we're also here into strategic relationships and cross relationships and also abundant mindset. So with that is my only ask of the Going Long family, to make sure that you don't just send one of those normal, like, hey, you don't know who I am. Make sure that you give them some context. So August, Ava, I really appreciate the two of you, your insight, and also most importantly, investing your time with me and the entire Going Long family today. So thank you very much.
Thank you for having us, Billy.
Yeah, my pleasure. And just really quickly for the Going Long family, didn't you love today's conversation? August, Ava, they really know what's going on. I love being able to talk international, remote, long distance, and so many different things. So make sure that you share today's conversation with at least 2 or 3 of your friends. In the meanwhile, I know that I'm looking forward to welcoming you back on the very next conversation. So until then, go out and make it a great day. And thank you very much.